We've now seen a resolution to the 7-day sideways range that Bitcoin was in. We chose the downside, and this has very big implications for how low the price could be going or potentially recovering, and I want to be covering those possibilities with you in this YouTube video. So if you're excited for them, do me a favor and smash up those likes as you're coming into this video right here. Double check that you're subscribed, and as usual, you've got phenomenal offers available with the links in the description below, including Blowfin, which is a no KYC platform offering you thousands of dollars to start trading. And as usual, be mindful of your country's local regulations. But if we come over to the charts over here, what we have that I think is overwhelmingly clear now is a kind of market direction here. Now, there are some people that are actually talking about kind of sideways support that the market might actually end up finding down here. We obviously haven't hit that sideways support yet, and I think that it's pretty reasonable to entertain. I still think that like look, if the argument, and we'll talk about it in a sec, but if the argument that we're going to bounce off the support level is true, and then, you know, everything's beautiful again on all-time highs, then my only problem with it is it means that actually what we're doing is we're starting to legitimize this price range, and I think that's a problem. You know, I think that if we do a lot of, you know, kind of whatever the fuck in this price range for, you know, the next couple of days and weeks, then we start to lose the key benefit that these kind of price ranges actually offer to the market. And in my opinion, in my experience, that is liquidity gaps. You know, when the market moves quickly during certain price levels, oftentimes that's because there's a big gap of liquidity, and so the market can just spike up and spike back down. And we see that happening quite often in this price range. You know, I mean, when we broke above this thick red line over here, it was a very quick rise up into the $60,000 price range, right? And this red line is at about $52,000. So we've known for a long time that this is kind of like an air gap in the market. And we started to kind of delegitimize that, or in other words, legitimize this range as a trading range when we started to kind of wick down into it, you know, and then kind of recover. And we're doing more of that right now. So that's really important. We're actually right in front of us, in front of our eyes, we're starting to establish a new price range. And I don't think that's a good thing, because I just think it's going to make it so much harder to get back up, right? I mean, the ideal situation that you want as a trader is that you have lots and lots and lots of price ranges which the market can move quickly through, because whether you're right or wrong, you're going to get the outcome of your trade a lot faster. And, you know, I always talk about how the number one thing that we're aiming to achieve in these markets, whether we kind of realize it or not, are the same kind of gains that, you know, somebody in the real estate game would be expecting. But instead of getting them on a 25-year timeline, we're expecting them on a 1-month timeline or a 1-year timeline. So obviously the game is different, but what it means is that if we can get price moves that happen quickly, we can make money quickly. So this is a problem, and I think that it weakens Bitcoin's case, because not only is it inconvenient, I think that it also is going to make 60K a harder resistance zone to break. In fact, this is a pretty bad rejection in my books now, because of how many times we got rejected off the 60K level, and honestly, how easy I think it should have been to get back above it. You know, it's clear that the support level became blurry. I was talking about that for a while, but the fact that we haven't really been able to push above that now is definitely not great. I think that your stance on this is really just going to boil down to whatever kind of, I don't know, decision you've already made about where you think this market is going to go, because a lot of us kind of make a decision and then just live with that without really questioning it particularly much, which is, you know, neither here nor there. I'm not going to pass judgment. I do it as well sometimes, but you know, I think a lot of people would probably say it's not the smartest or best idea financially, at least. You know, so look, different schools of thought. If you are bullish, then this is going to be an interesting support level at $54,000, $55,000. You know, I mean, it's a level that the market has already bounced off a couple of times. We didn't really interact with it much in March, February of 2024. But if we do bring it back to 2021, we did have some stuff going on here. Nothing particularly crazy that I would really pay too much attention to, but it's there. And I think that if the market did return down there, especially because of the more recent price action, there is, you know, some reasonable expectation of support down here that somebody could have. I think, you know, I mean, we did get a nice bounce over here. We did get a nice bounce over here. Obviously, we got the deviations a couple of times, but you know, and so, you know, whether you're expecting support, that'll look something a little bit like this, or maybe you expect kind of a deviation and then back up. Trader SZ was talking about that as well. You know, that's going to vary based on, you know, again, your approach of how quickly you think things can happen. I wouldn't rule it out. You know, I wouldn't rule it out, because even though I don't want the market to legitimize this price range as a range, you know, as an environment where we can just kind of trade sideways, even though I don't want that to happen, you know, it looks like the market is trying. And I think the bottom line is that even if you are bearish and you're expecting significantly lower price levels, you're probably still going to have to expect some support here. There's probably still going to be some shorts that start taking profits down here. It's a good price level, right? I mean, you know, I think there's going to be some buyers stepping in, because what you start to get if we find support over here is a slightly, not really massively, but a slightly more macro higher low. So that's important, that's useful, and I think that does make a difference if the market wants to start continuing on higher. We do have that resistance that we have to deal with at 60K, but the other thing that happens if we manage to bounce off this support level is that we can start to form a bit of an ascending triangle, okay? And that really allows us to form a very, very nice pattern to break out upwards. The market kind of did that over here, and it worked out. So it worked out really well, actually. Bitcoin loves these kind of patterns in my experience, so that's definitely one which I would continue to watch out for. I think, though, that, you know, one of the key levels that I've been, one of the most key levels that I'd kind of be interested in has now been broken. You know, we're no longer, this is the thing, is that, like, you, whether or not you think a bounce is going to happen at 54, 55K, what's clear is that we're no longer just floating around the 60K level. And that, to me, puts this market in a very different place compared to where it was, you know, well, just yesterday, or, you know, at any point, really, over the last couple of weeks, minus this particular crash right here. So I think that's important to keep in mind, and I think most people won't. So that's why I'm telling you. If we take a look at the path to kind of rise back up, you know, we do have resistance, again, like I said, at 60K. And by the way, just to change the pace, a lot of people have been complaining about me speaking quickly. I just like to speak quickly. I didn't really realize that it was going to be a problem for people. It's not a problem for me. And I actually, it's funny, I was listening to the Elon Musk Lex Friedman podcast, and they were both talking about how they watch videos on 1.5x speed because it makes it a little bit faster. You can digest information potentially better. You don't lose concentration, first of all, and I think that's really helpful if you have concentration problems. But they also just kind of, you know, they get to get through 50% stuff, 50% more stuff, and I felt like that was actually really smart, so I started to speed up a little bit, and I like it. I don't know how many of you like it. You know, when I change something, everyone's going to cry, but how many of you are silent and actually like it? Let me know in the comment section if you appreciate faster speech. I appreciate faster speech. It makes these videos a little bit more enjoyable for me to record. But it is what it is. I also like keeping it... I slow down when I need to. I just, you know, I like keeping it kind of, you know, keeping it moving, right? Anyway, let's continue on. That's not related. 60K resistance. Obviously, we still have some of that resistance with our Ichimoku cloud, but like I said, it is getting thinner here, so there is a really nice opportunity for Bitcoin now over the next couple of days to start attempting to break that level, and I think that's actually going to really, really help Bitcoin out. I think that, you know, bulls who are interested in that kind of bounce coming off here, you know, they might actually feel quite positive that Bitcoin can break the resistance next time it gets up there. So I think that's quite interesting. And of course, the daily EMA ribbon remains in the same price range. So this is still going to be a problem for Bitcoin here. We'll continue to see how that evolves as well. Now, what's really interesting about this is, and you know what, we're gonna have to split test this, yeah. So I really do need your engagement on this. So tell me in the comments. We might just have to speed things up in a second here if I start exciting myself with this analysis, because this analysis is exciting, because I get excited by prospects of making money, especially when it's easy. I love easy money. It's actually quite enjoyable to just trade when you see easy opportunities, because first of all, you'll make money. So that's really nice. You'll actually probably make more money than with most other strategies, and you get to not hate your life while you do it. So if anybody here decided to trade for the first time because they wanted a better life, they wanted a life that didn't require them to clock in and out of a job and all the other bullshit that comes with a normal life, then that might appeal to you. So, and I say it like that because obviously everybody came in for that reason, but nobody actually does it. Anyway, S&P 500 has seen a big day. It ended on Wednesday at 5,400, 5,450, and today it's at 5,550. So that is a big increase. It gapped up. It had no problem with this resistance level, and it now has support down here. So it would be amazing if the S&P comes back down to the support level, and I think that would pave the way for the S&P to continue to trend to all-time highs. And of course, if that starts to happen now, then we're pretty much out of time. Well, there's still a bit more time, but there's not we're losing opportunities now for the S&P 500 to be in a bad position right before the election. Obviously, as we know, and I've covered this extensively, those of you that are subscribed to this YouTube channel, as we know, the S&P 500 does have a tendency to pretty much be in bullish environments right at election times. Pretty much every single time. Small exceptions or big exceptions apply, like '08, but it's there and you can check it out. So when we're talking about something like this, what I think is really, really important is to at least understand that it's not unreasonable to expect, a new kind of all-time high environment constantly surrounding the election. And if that is the case, then of course, we're back on track. We're days away, weeks, maybe a couple of weeks away from setting new all-time highs in the S&P. I don't know. It could go anyway, obviously, but it looks pretty aggressive, and it looks like this correction is kind of over. And the S&P is quite predictable. Obviously, it's going to, not continue at some point. And I'm not really in the business of predicting when that's going to happen because I've always failed at it, and probably so have you, and you'll continue to fail just like I will. So there's no point. I think just while the market's giving you easy money, take it, and then eventually you'll be wrong, and hopefully by then you've made enough money to the point where you're not upset by your loss. But if the S&P 500 is that strong, then I think the the implication for Bitcoin is pretty much just going to be that we should see some more strength on Bitcoin. And I definitely think that it's a little bit concerning the fact that Bitcoin did end up breaking down here when the S&P 500 did rally up. And I think this might actually be tied to the dollar, because if we take a look at the dollar, we did see the dollar pick up a little bit right here on this index. So that is clearly, I think, one of the main factors working against Bitcoin right now. But if the dollar does end up finding resistance in the sideways range, which it already has, then that does mean that this is pretty much over. And if the S&P 500 continues to rally back up, then I think that could place Bitcoin above $60,000. And I think, one of the main takeaways that I want you to, one of the key takeaways I want you to have from this video is that I still don't think that Bitcoin's fate, Bitcoin's outcome is dependent on Bitcoin itself in any capacity. And I still firmly believe that everything we want to see with Bitcoin is purely going to be a trickle-down effect of a bullish traditional finance environment. I think that if it's bullish, we're good. And I think that if it's faltering, if it's weak, if it's sideways, whatever the case is, then I think we're in trouble. So yeah, that's very, very important. And that's still my take on these markets, which is disappointing, but it's true, right? At least it's true. I don't like it. I don't like saying it. I know that you don't like hearing it because, like that, come on, do something, right? I'm sure everybody has, or many of you have seen this come on, do something meme, especially for Bitcoin. We all kind of want this energy, but obviously, you're kind of, I can't put this on my screen without cutting my face out, but many of you have probably seen this at this point. This is how it usually goes, isn't it? Let's open this image up in a new tab because that is brilliant. I mean, this is so, I can't take off my face cam today. So yeah, this is so typical that this is kind of what we see after we ask Bitcoin to do something. So that is absolutely fantastic. Smash up the likes for that, ladies and gents. And then, yeah, in terms of downside, I think that if the market did end up losing $55,000, we are probably looking at 52. Would this level hold? I mean, you know, there's double bottom, you know, potential here. I don't think so. I mean, I think that, you know, maybe we do get, you know, a bounce, and maybe the bounce comes, you know, here. And, you know, you can even start forming, you know, kind of descending triangles, right? And you start kind of painting patterns like that, and you expect to drop. But I don't really know or care how it would happen. But I don't think it's going to hold. It might take some time. It might happen quickly. It also doesn't matter. But I think that we'll be heading lower if we get back to 52. And, you know, if that's the case, then it's pretty much, you know, 48 and 44. Especially 44 that I'm very, very interested in. We'll see. We'll see. I still remain more bullish than bearish. I have more reason to be bearish now than yesterday, especially because we broke below one of my key lines. But, you know, the key point that I've been resting my case on for months and months and months, after correctly saying that while we were down here, we could see, I mean, now it sounds silly, but that we could see $30,000 or $40,000 as price targets. Obviously, back then you gotta, you know, I mean, if you were here back then, let me know in the comment section. But back then, it took fucking serious balls to say Bitcoin's gonna go up to 30 or 40, because, you know, I mean, we lived through, you know, a disastrous year of downtrend. And it was the worst bear market that I have ever seen, that many, many others in Bitcoin, people who've been in Bitcoin since 2009, said that this was the worst bear market they ever saw. You know, and so it really took some serious balls to say 30, 40K down here. And I remember even a couple of times, some of you will remember this too, I even said maybe even higher. And at that point, I was like, this is kind of wishful thinking, but I think it could happen. And I'm going to get a lot of flack for saying it, but I'll say it anyway. And obviously, that is what ended up happening. So that Four Flies intuition is definitely pretty sick, mate, to be honest. That's how I'd put it. But yeah, I mean, you know, after such a beautiful rally, look, it's getting big. Don't get me wrong. It's getting a little bit too extended at this point, but we are still in a very digestible overall descending channel, bull flag, I'm sorry, whatever you want to call it. It really doesn't matter, but it's just, you know, slow downward price movement after quick upward price movement. I mean, it's still the most typical pattern that you can expect in any market during an uptrend. It's just taking a long time, and that is messing with people's heads. But obviously, you know, that doesn't have to happen to you. And you know, I think these videos make that a little bit easier, you know, to get there, to get to a kind of cooler head. With that, ladies and gents, I hope you have enjoyed this video. If you have, you know what to do. Hit up those likes, subscribe, tick the bell, do all that good stuff. You've got phenomenal bonuses available with the links down below when you start trading using my links. Bybit remains the best in the game. Apex is their decentralized exchange, and Blowfin is a no KYC exchange. Absolutely sick stuff there. Go ahead and check them all out if you are interested, and always be mindful of your country's local laws and regulations, because some of these or all of these platforms are not allowed in some countries, yeah? So just be careful about that. There is also this phenomenal video on X. I don't know where the hell I am. There is also this phenomenal video on X called A Casual Conversation with Friends on Tesla. Many of you checked this video out after my last video. Many of you have still missed it. You are missing out big time, and I am going to tease you with this because I covered some beautiful analysis on the dollar that I've never said before. I covered extended, in-depth analysis on Tesla that I've never said before. I've covered extended, in-depth, realistic, practical analysis on the S&P 500, some of which I've covered before. But the bottom line is that if you like this content, I'd say this video is better than the standard video you get on my YouTube channel, and you've missed it. So if you want to get it, it's linked at the very, very top of the description. Go follow me there. I make some shit posts on Twitter. I'm going to be doing a little bit more trading stuff. It is definitely... I think it could be a home that's more powerful than YouTube in the future. So it's good to get on. I can, you know, I reply to people and answer questions and stuff. It's a beautiful place. So definitely come check this out. It's a 17-minute video, and the first few minutes alone will blow you away. That will probably change the way you think about markets. Yeah. Hope you've enjoyed this one. You know what to do if you have. I'll see you all in the next one. Cheers.